Hi everybody, my name is Patrick Quinn. I'm the founder and CEO of Hat Tip Wealth Management. I'm a financial advisor and I help members of Generation X and medical professionals with financial planning and investment management. The past week or so has been very challenging for those of us in the stock market, and I've had a number of discussions with my clients on this topic. And in today's video, I'm going to bring you the highlights of those discussions that I've had. The most popular topic that comes up in my discussions is this 2008 all over again, and why is the stock market down so much? Well, it is not 2008 all over again. 2008, 2009, and the resulting Great Recession was an economic disaster for the U.S. economy. And the main driver of it was a loss of confidence in the banking system. We do not have that situation currently. In fact, many analysts and experts will tell you that the U.S. banking system has never been healthier. In addition to that, we have some very positive things happening in the U.S. economy overall. We have good job growth. We have good consumer spending levels. Corporate profits are at record levels. We have a strong housing market, and we have low interest rates. All supportive factors for the U.S. economy. What we have is developing with the stock market is a lot of uncertainty developing. And there's generally three areas where that uncertainty is most relevant. Number one is global issues. And mainly right now, the focus is on China. We've seen China come back with lower than expected GDP levels. They've done other macro events such as devalue their currency. So there's a lot of uncertainty happening with China. And because China is the second largest economy in the world, people have to pay close attention to what is happening there. And that uncertainty is driving down stock prices in the U.S. The next issue is what's happening with interest rates. Interest rates have been at record low levels since the Great Recession started back in 2009. The possibility of higher rates also is contributing to a lot of uncertainty with investors and causing some concern, forcing people to liquidate some of their stock positions. And the third issue is sharp movements lower in commodities and mainly in oil. Now, in the big picture, lower oil prices is positive for the U.S. economy. It's positive, especially positive for the consumer because the price of gas will go lower. But there are certain segments of the U.S. economy where it's negatively impacting it right now because the price has moved so dramatically lower in such a short period of time. So those industries are being negatively affected, and that is also causing some weakness in the stock market. There are, I'm sure, a host of other factors such as technical issues, etc. I won't go into those here today, but those are the three main things that I see that are driving equity prices lower. In addition to that, we've been in quite a bull run. In fact, we haven't had a correction in the U.S. stock market in 4 years, which is an incredibly long period of time when we look at it historically. So a lot of people will tell you that it's not surprising that we're seeing a little bit of a pullback in the current environment. The next topic, the next most popular topic is what does this mean for my portfolio? And this gets very interesting when I'm talking to my clients. There's two sides to this. On the one side, I have a lot of clients that have a financial plan, and the other side, I have a lot of clients that do not have a financial plan. My discussions with the clients that have a financial plan in place are very factual, unemotional, and very specific. Why is that? We have a game plan in place. We've defined their goals. We've defined their risk levels. We've defined what is important to them. And we've put a plan in place that works in conjunction to all of their goals. So the fact that the equity markets have dropped so much in a short period of time isn't going to change their overall strategy. We may tweak something, we may move something out of here, move it over there, etc. But they're in it for the long haul, and they have a longer term perspective on what's happening. And that puts them in a much better position than my other clients. My other clients are very emotional. They have kind of a mixed bag of investments in their 401k. They may have a brokerage account somewhere where they've been buying and selling stock for a period of time, but there's no cohesive plan in place. It's kind of a mismatch of everything. Those clients, it's a lot of in-depth conversation, trying to understand what the strategy is, trying to understand ways that I can help them get to their ultimate goal. So the point of that is it's important to have a plan. It doesn't have to be an elaborate or extensive plan. It can be very simple and basic. It depends on what your circumstances and what your situation is. But my suggestion and my advice is to have a plan. Make a plan. If you don't want to do it yourself, find someone that can help you. Find a financial advisor that has your vested interest in place to help you with that financial plan. And then the third most popular discussion topic is what is going to happen in the future with the stock market. I have no idea. There are a lot of people on Wall Street, a lot of people elsewhere that will try and tell you they know where the stock market is going to go. I don't believe any of them. What I believe is you have to focus on things that you can control. You can't control the following with your investment portfolio. You can't control how much you're investing. You can't control where you're investing it. You can control what your allocation looks like. And you can control how much money you have available for other things. Those are the most important things you can focus on. Everything else is secondary. So what I tell my clients, not to worry about where the stock market is going, because you have no control over that. If you're not comfortable with what's happening in the market, if you want to take some money out and put it into cash, we can certainly do that. We certainly have those conversations. But again, I try to keep my clients focused on what the ultimate goal is. So they know that despite the fact that we're seeing some weakness in the market right now, the ultimate goal is 5, 10, 15, 20 years out. So this actually could be an opportunity for a lot of these clients because they're looking at stock prices that have dropped dramatically in a short period of time, and there's actually probably a lot of value out there. So those discussions are much more, I'm searching for words here, but they're much more enjoyable because both of us understand where the client is trying to go, and it's a much easier conversation. So those are my thoughts on what I've seen with my clients so far in the last week. Again, as I said, it's been a challenging market environment. But if you have a plan, you can solve this, and you can definitely succeed financially in your life. If you have any questions, I'd love to get your feedback on this video. You can reach me at www.hattipwealthmanagement.com. Again, Patrick Quinn signing off. Thank you, and have a good day. Bye-bye.